We look at every sector and we look at every country, and our criteria, we are research driven, we do our numbers, and I fully agree with what Vanessa was saying earlier. But you cannot, but what we do is we're a bricks and mortar company. Yeah? We understand and live and breathe real estate for our investors. They're very conservative investors, and we're in the wealth. We like wealth creation, but we're also very happy with simply maintaining and giving back a very secure return year on year. That having been said, we go via quality. Yeah? It's not so much the regions, it's not so much the countries. We're invested in all of these countries. We have 18 billion in Europe. We know how these markets work. We've been going into B locations longer than probably anybody else here in the room. We've bought in locations like Bremen and in Karlsruhe and in Mannheim and we've never gone to Bad Salzuflen, but I'll leave that one to you. Yeah, go ahead. Yeah, well, maybe with Redos indeed. Yeah. But so really, we are your typical core plus buyer, added value buyer, in the sense that if the real estate deal makes sense for us in the areas of office, logistics, retail, high street retail, hotels, we will do our best to try to buy that building or to give it a spin. So it doesn't really matter what asset class or what country. We have preferences, of course, but again, that's don't want to give away the silver here. But if you're trying to invest 2 to 3 billion per annum in a very tight market as it is, in the quality segment that we look at, that means grade A assets, preferably with a certification, or grade A assets in B locations. Then in this market you can't really be a chooser. You may have a top-down view, but it's bottom-up reality that makes you choose and buy your assets, and it's competitive, and that's what you look at, and that's what needs to make sense. And that can be Ireland, that can be Turkey, that can be Helsinki, or that can be Madrid or Barcelona, that can be Paris, or that can be Frankfurt, Hamburg, or Bremen, or anything except for Bad Salzuflen. That one, I think Teachers has a great wealth creation approach there. But we'll do it also, we'll take leasing risks, and we'll look at high street retail. So if you do 50, 60 deals a year, in that quality segment of the market, which is a small segment of the market, I guess, you can't really be that choosy in the sense of, I'm going to limit myself, and Europe has become small. And of course we like Germany, we like the big economies, but of course we'll look at the other economies as well.
Of course, everything is interesting, office, retail, industrial, of course, but let's talk about residential. We see in our account reports that through the last 15 years it's a very stable development in this market segment. Also in the difficult years of 2008 and 2009, it was more stable than each other asset class. And of course, it's an opportunity to invest in residential, especially in Germany. We see there's not so much in the pipeline, which makes sense for the next 10 or 20 years. Most of the new products focusing on the high price level for condominiums or for the high rents. But the biggest demand is in the mid price level. That's the biggest purchase power we have. And we have old buildings in the market, and the demand for the next couple of years is so great that investing in new residential buildings or properties, it's very interesting, it's stable, and it's on the safe side of life. And I think residentials will be an important part of the market also in the following years.
Okay, good. And are there any other, do you think that's a play also for internationals, particularly that kind of developing this new type of stock, or is that really a local national play here?
I think it will change. In the past, residential market was more semi-professional, it was more local organized, and now we see a positive development in the market to see more transparency on it. And I think it's by this way it will be very interesting also for international investors.